Welcome back. Well, the landmark digital assets legislation, the Clarity Act, is still hung up in Washington. Banks have been pushing back against crypto players paying rewards. They're warning clients could pull massive money out of deposit accounts and the traditional banking system to put them on crypto platforms if they believe they can get paid for it. President Trump, meanwhile, criticized the banks this week over what he said that the banks were stalling the bill, posting to Truth Social, quote, "The Genius Act is being threatened by undermined by the banks, and that is unacceptable. We're not going to allow it. The U.S. needs to get market structure done ASAP. Americans should earn more money on their money. The banks are hitting record profits, and we are not going to allow them to undermine our powerful crypto agenda that will end up going to China and other countries if we don't get the Clarity Act taken care of." Joining me now is blockchain.com CEO Peter Smith. Peter, thanks very much for joining us. And your company is a financial services company, which is catering to crypto, allowing for the storing and buying and trading of crypto assets. Tell us how blockchain.com works.
Yeah, so we help institutions and people all over the world participate in the crypto economy. So you can kind of think of us as like a Morgan Stanley for crypto. We run brokerage products, institutional prime brokerage, custodian, all those kind of products that let you sort of acquire, hold on to, and then use your cryptocurrency. And we do that for thousands of institutions around the world.
So what are your thoughts on the Clarity Act and whether or not crypto players should be able to pay rewards to customers if they move money to the crypto platform versus a traditional deposit account?
It's a great question. I think that at the end of the day, I'm passionate about consumers earning the most on their money. I think, taking revenue out of the hands of banks and putting it into the pockets of Americans is something that, I'm really passionate about and really supportive of. At the same time, I think that it's important to recognize that right now the U.S. is lagging in terms of, regulation and clarity for the digital economy. And I think it's really important that we fix that. So, even though this current, iteration of the bill is a compromise, it's not everything that the crypto industry wants in terms of being able to pay rewards. I still think that we should support the bill, we should pass the bill, and we should get on with making America the best place to build and run a cryptocurrency business.
Yeah, I mean, everybody wants the bill to move forward. The issue is, should crypto platforms be able to pay rewards to customers who move money to their platforms in the form of stable coins or whatever, versus taking their money and leaving their money in deposit accounts? I mean, when you say, we should have money in people's pockets, I mean, it's in people's pockets in deposit accounts right now, right?
Yeah, but the banks pay a very low rate. So the debate isn't really about whether the consumer should get paid rewards. It's how much, right?
Yeah,
and crypto firms, because they're more efficient, because we are using that digital money, we're able to pay a much higher rate on deposits and a much higher rate of rewards. And so in my book, that's a great thing for consumers. Anytime we can take money and put it into the consumer's pocket, we should be doing that.
Well, maybe this will be the catalyst to get banks to raise rates on deposit accounts, because you're right, these are very, very tiny yields on deposit accounts, no doubt about it. But the issue around regulation comes to mind, because if you're going to have crypto players look like banks, shouldn't they be FDIC insured? Shouldn't they be having the same regulatory framework that the major banks have?
Well, most deposits in the U.S. are not FDIC insured because of the $250,000 limit. And that said, crypto firms are highly regulated. You see the OCC charters that are coming out, they're getting regulated as trusts, which is an even higher form of certainty. So I don't think there's a lack of regulation. I think what this is ultimately about is the fact that the banks are at all-time profits. This is the all-time high for profits inside banks and margins inside banks, because of the high interest rate environment and the fact that they're paying out pennies in terms of the rewards they should be paying out to the American consumer. This isn't about not having enough regulation on crypto firms. This is about the fact that banks fundamentally don't want to give up a huge fat profit stream that is at the moment at an all-time high across the United States economy.
Well, I mean, look, it's a great point that you made about the $250,000 cap, because you're insured only up to $250,000. This is another really good point. I spoke with French Hill the congressman from Arkansas, who's been really working on this from Financial Services Committee. Here's what he said yesterday. Watch this. Do you believe the president will want to see crypto pay rewards for money held on crypto platforms as opposed to the major banks?
We did that last year in the House. We got 78 Democrats to join the Republicans, and we passed the Clarity Act and the Genius Act with substantial margins, bipartisan. And in those bills, we had the two principles. One, that stablecoins would not pay a yield. Why? Because we view it as just a new payment token to be used on a blockchain. It's not meant to be a bank. So this issue of rewards comes up. And my best advice is that that's handled in the rulemaking by the Treasury, where bank and non-bank issuers of a dollar-backed stablecoin are treated identically when it comes to sales practices, marketing strategies. I think the non-bank dollar-backed stablecoin issuers and their partners and exchanges, they want to have a similar ability to package products, not unlike the banks. I think we can find a solution here.
Yeah. You know, one of the issues here is that the crypto players are already paying rewards, right? I mean, there was a loophole in the Genius Act, whereas when you take a look at a third party involved, you can pay a reward. And so isn't it in crypto's best interest to delay? What's your take on this? And then I want to get your take on tokenization, because it feels like financial services, finally, even the big banks, are moving toward tokenization in so many areas. And I'd like to get your take on how that plays out.
Absolutely. So look, not every crypto platform is paying rewards. Like in the United States today, my firm, blockchain.com, is not paying rewards. We do overseas, outside the United States, but we don't in the U.S. until we have more clarity about the regulatory sort of outlook in the United States. I don't think, it's in the interest of the industry at large to delay. I think that there are some players in the industry that do derive a lot of their revenue from this activity. And you've seen a very consistent and very aggressive campaign by those players to, try to push the bill more towards their business outcome. And this is why, bringing it back to what I was saying earlier, I actually agree, with the congressman. I think that a lot of this should be handled in rulemaking. And I think that it's better to pass a market structure bill than a perfect market structure bill.
Yeah.
And so to be clear, like my blockchain.com and myself as a individual person, we're very supportive of the current draft of the bill and would like to see it go ahead and get through the House.
Yeah.
Notwithstanding
No,
the fact that there's some of our competitors that are maybe not as aligned with that approach.
Peter, talk to us about tokenization. Where do you see this going? Tokenized securities are all the rage right now within financial services.
Yeah, I mean, and for a good reason. We're basically talking about updating something that hasn't been updated since the 80s, which is like, how do you track and store and move value, right? And I think that this beautiful vision of crypto and the thing that's going to add a lot of value to the US economy is that we're able to put those on a really efficient open protocol like Ethereum or Solana. And we're able to greatly increase the velocity that we can move them at, the velocity we can trade them at, the kind of financial applications we can build. And we're able to do it much, much more efficiently, right? When we do things more efficiently, it means that we can charge less and we can pay consumers more. And realizing more efficiency in financial services can really drive the US GDP and drive our economy forward.
Okay, we will leave it there. Great conversation. We so appreciate you walking us through all of that, Peter. Thanks very much.
Thank you so much for having me.
All right, we'll be watching blockchain.com.